Thank you, TG, for that introduction. I'm a partner at Terra Trust. Also a PhD candidate at King's College. And before that, head of investment risk at Pal Pensions in Nigeria. Okay, sorry, this is bad one. So, what I'm going to be talking about today is collaboration, investing in Africa. Coincidentally, this is a Black History Month, and I just want to take us down the road that I traveled in 2021 at the tail end of my MBA at Warwick. And so what happened then was a group of us friends decided that we wanted to move out of student accommodation and into town. And we moved into a house, I still remember distinctly, 71 Fargus Ford Road. Now, it was in a city part of town, but that's not the real story. The real story was the house had it was in a compound of three houses, 71, 70, and 69. Coincidentally, all three of them were owned before by an Indian man. However, number 69 had been bought out by another Indian family. Now, these guys had the older family, the parents, and then the three children all living in the house. My friends and I stayed in that house, which shared in 71, they stayed in 69, and within 8 months of us leaving that property, they had already, I do not know how long they had already been staying in 69, but by the time we left 71, roughly 8 months after, they had bought another house along the road, essentially collaborating with themselves to build wealth within their community. I wanted to point that out because I'm going to go through statistics that are important. So what we have here is Black home ownership, or ownership amongst ethnicities in Britain. What you see here, you see this isn't coming up very well. But what you essentially see here is that Black home ownership is roughly at 20%. And when you look at Black African home ownership and others, even mixed race, you start to see that it's low. Coincidentally, white and British ownership at 70%, Indian roughly 68, and essentially just want to point that out. Another statistic is business ownership. I have taken away white owned businesses. They make up roughly 80% of business ownership in the United Kingdom. But essentially, the numbers that should be here are not showing very well. Point out to the fact that African or Black owned businesses is roughly at 2.11%. It has increased over time because before it was shortly just under 2%, but now and this is at 2021. There's a large and more recent data. This shows higher people in higher education. I'm not sure if I can connect my tablet to this directly because anyway. And so more than 80% of the higher education population is white. African population in higher education in the United Kingdom is 7.9%. The share of Blacks and Africans in the UK population is roughly 3.7%. And this shows that we essentially have double our commensurate figures in higher education. It's important because I'm trying to point out the trend. And then we see roughly 50% of Black people that go into, we are the light green graph over there. Roughly 50% of Africans that go into state secondary schools end up in higher education. This shows population of people who have immigrated away from Africa, Saharan Africa, within the last 5 years, and roughly 1.3 million of us have left Africa since 2020. It's important because a lot of us are coming to the United Kingdom, Europe, and North America, and this presents an opportunity that I want us to think about. Going further, we see some other statistics. Over 1.5 million Africans graduate every year. A lot of them are without jobs. We have a funding, an infrastructure funding deficit of roughly anywhere between 130 to 200 billion per year that needs to be funded. That in itself, if we use the statistics over the next five, if we take it backwards, what we see since 2020, that means there's a funding deficit since 2020 of $1 trillion that needs to be put in force to at least catch up. And there's an opportunity that presents itself with what's happening in the world today. Global supply chains are collapsing, and this is essentially because of the increasing fractious relationships between the United States and China. And this presents an opportunity because regional supply chains and national supply chains are coming up. This means that the funding gap, the infrastructure gap that has been left fallow for a while, people need to put money there because business has to go on. You cannot rely on just the United States alone. In the last couple of years, they've proven to be unreliable partners. And so even Europe is trying to look for partners. When you look at it, I'll give you an example. Most of the world shipping routes go through the Horn of Africa, which is roughly through the Djibouti, Somalia area. However, in the last couple of years, maybe in the last 10 years, increasing piracy events, the guys that are in Yemen that are causing all the problems have made that trade route, even though it's shorter than going to the Horn of Africa, it has made it more contentious, more expensive to ship. And so what is happening is that traders or shippers are now trying to go through the longer shipping routes through the Cape of Africa, that's through Southern Africa instead of through the Middle East. And what you're seeing there is more development is happening there. Madagascar, unfortunately, we just had issues right now. Mr. Solin mentioned some things earlier. But Madagascar, Madagascar, for example, had over 89 different projects that they were looking at running right now. They wanted to run, what happened? 89 different projects, and all of them were around infrastructure, from storage capacity to ports. They had like 5 different ports going on, and they had some energy projects going on. Coincidentally, and this might interest Mr. Tony, there was one we were looking at, a $350 million hybrid solar system that was going on, was because of events that happened just shortly before the coup. You decided that it wasn't a viable project. Not that it wasn't a good project, but then there were things happening in the background, like Madagascar over the last couple of years have defaulted on some of their obligations, meaning that some DFIs who we partner with weren't really comfortable in backing us on those transactions. But on the whole, when you look at the story I'm trying to outline, what you see is that there's more demand for African trade at this point in time. And so, our problem statement is essentially this. Looking at it combined from the VC and the PE perspective, we find out that there's a limited access to capital. We have an unserved market. We have growth constraints, which also ties into limited access to capital. And there's inconsistent impact, which is one of the things that have been mentioned in terms of having a runway, having capital to fund that runway, and more especially, there's a disconnection from home. And so, coming together, this is what I'm looking at. Africa collaborating with its diaspora to fund all of these opportunities that are out. And so, essentially, when you look at the VC funding gap of 1 trillion, and you look at the infrastructure funding gap of 1 trillion or more that I mentioned earlier on, you find that there's roughly 2 trillion of opportunities of trade that can happen with Africa and its diaspora. And unfortunately, when you look at funding, just excuse the slides because once again, it's not really, some things are missing from here. But when you look at what VC companies, which I'm using to extrapolate for the whole story at some point, you find out that we get roughly less than 0.5% funding across board of total funding that happens. This is something we need to think about. I'm going to point out to a number of people. We all know about Calendly. We know its journey. Once again, I apologize. The slides are not coming out as they should. We also know about Lemfi. We've heard about their successes. And we also know about Move. It's currently negotiating a $1.25 billion deal that should make it automatically a unicorn once it's done. But crucially, when you look at all of their investors or their major investors, you do not see an African partner on this. What you see instead are American or even Middle Eastern partners. For example, Mudabala is not African. You can see Uber, you can see Triathlon. All of these guys are not African funders, and we expect to grow. It's something where just a bit of a reflection. And so what we're looking at coming here at Terra Trust Capital is essentially becoming an arbitrage between Africa and its diaspora, essentially transporting capital and resources to where they're needed. So it might be diasporans funding African businesses, or on the other hand, it might be Africans who have loose change or firepower within them to then also deploy within diaspora businesses. And what we're looking at doing is, number one, create opportunities for innovation, because we're going not just with capital, we're going with strategy. Facilitate cross-border investments, like I just mentioned, establish dedicated funding pipelines, and support African-backed businesses. And we're doing this not just with Africans, but also with African allies, individuals that have seen the African success story, that understand the challenges and are willing to help work to solve these challenges. Currently, we're raising a $50 million fund. We've gotten commitments of roughly $1 million on that. But essentially, this lays out our strategy. So, multi-strategy fund. We do a bit of VC. We do also key transactions. And when you look at our activities in Africa, we're trying to go more on infrastructure, essentially funding infrastructure projects because of that dichotomy and where we see that there's value to be invested in Africa. I'll go into this for now, but one of the reasons why we're also looking at infrastructure is because we're looking at the natural hedge for currency fluctuations. And we tend to see that more African or more infrastructure projects have a bit of FX earning power in them. And what this does is it acts as a FX volatility hedge, and essentially gives more participants interest or comfort in doing these projects. And in terms of how we intend to approach this, we intend to approach this through collaborations and partnerships. This is central to our investment strategy. Co-investing partnerships. So we've entered into a number of co-investing partnerships. Beyond the fund we're raising, in other transactions we've already consummated. What we have done is we've gone in with communities, we've onboarded a number of communities. We've also gone into accelerators, business angel networks in the United Kingdom and beyond. And essentially, we're trying to also democratize the space. In one of our previous transactions, what we did was we made a ticket size as low as $1,500, which, when you look at it in terms of VC transactions, it's not a lot, but to the common man, it's still a lot. And so, one of the innovations we're doing right now is going into smart contracts, essentially putting these things on the blockchain, essentially tokenizing transactions, and what you then have is fungibility. Say someone decides to do $100 in a transaction right now, and he needs $10 to pay for coffee. If he is able to do that, he's able to sell $10 of that transaction to pay for his coffee. Because what that does is it creates liquidity. It enables more people to participate because there's a barrier, there's a cost to entry, and that cost is essentially the benchmark, the entry benchmark. In terms of deal sourcing partnerships, we're also collaborating with other investors, with other players in the field, to essentially understand what deals are out there, to know what to invest in. And with funding partners, we're going beyond the traditional VC or PE guides. We're also going to DFIs and even DFIs and HNIs to ask them that, hey, do you guys want to invest with us? And not just in terms of coming on as LPs. We also are looking for LPs. But one of the things we've also done is we've also gotten into them in terms of on a deal by deal basis. So we share the information, we analyze the transactions, we structure them, and we give it to these individuals and ask them that we tell them essentially what the challenges are, what the opportunities are, and what the likely exit routes are. And if they're interested, they come on with us. So essentially using different funding mechanisms, and I'll go on to more on the funding partners because we're also looking at exits. I'll go on to more of what we've done around them. Essentially, this is how we intend to structure the portfolio. There's going to be a portion to ensure that there's liquidity in the portfolio. Looking at because we want to be able to give investors that trust that when they come into transactions, they know that if they do desire to have liquidity, we're able to provide those liquidity. Also looking at how we also are structuring it. The blue chips and treasuries portion also ensures that we also are able to manage our risk, particularly when we go into admittedly VC and P transactions are a bit more risky. But we need to be able to ensure that we manage those risk portfolios at the end of the day. For us, this is the most important thing that we're doing right now. And what we've seen is over time, and it's one of the most important things that any investor asks for. How do we get our money back? How do we get our returns? Traditionally, what you see is strategic investment sales or secondary sales. We have less of IPOs in Africa. We have less of share buybacks or even Islamic products. So when we sat down, because we're a group of financial professionals, we looked at for example, in Nigeria, let me use Nigeria, the pension industry is having a bit more. By law, there's an Islamic fund, and that Islamic fund has to invest in Islamic products. And what we find out is there's a dearth of products that fits into the fund. And so we've spoken to a number of PFAs in Nigeria, looking at how to structure them, spoken to a number of Islamic banks, and they're keen on coming in with products as long as we're able to structure them, meaning that they're exits for our investors. Because what we're doing is we're giving them the opportunity after we structure the transactions to co-participate, private placements, working with a number of asset managers also in Nigeria to ensure that at the end of the day, there are exit routes beyond what we traditionally see in terms of, say, secondary sales. There's only so many people at the end of the day that might find synergy with your company in terms of the secondary sale. And so what you have is you have to find a way of getting it to the retail at the end of the day, which is where the most exit options are. Just a bit of a look at who's backing us. We have Olumide Adeosun, who is the current MD of Eternal Oil as the chair of our advisory board. And we have Paula Faniro, who is also head of change management at the Nigerian Ministry of Finance. A former colleague of mine, Katrina Spinova, she's a change management expert, people management expert. She's also on the board of advisory, and we have a semi-well-known or well-known finance player, so also Paul Okunaya, also on our advisory board. Currently, beyond the team that works with us, these are my partner and I. My partner used to be head of investment banking at Eva Capital, and That's myself. Used to be head of market risk at Sterling Bank, and then went on to head investment risk at Power Picture. At the end of the day, what I'm outlining, what I want us to think about is we need to go in collaboratively with ourselves as Africans, either on the continent, beyond the continent, and with allies. We need to also be creative as to how we exist. Saying that everybody is going to be able to become a unicorn is also not feasible. Saying everybody is going to have a strategic sale is also not feasible. So how do we do this? How do we ensure that there's more participation? How do we ensure that there's more information? There's an information gap that currently exists. How do we ensure that we educate people? This is what I want us to think about. This is what we at Terra Trust are trying to solve for. And thank you for your time. Thank you, Ope.
We appreciate it. Before I move on, has anyone got any questions?
So I'll just project. So hi, I'm Chantel. I am actually also raising a fund, but my background is in emerging technology, particularly blockchain. And I just wanted to ask about the blockchain piece. Are you raising your fund in fiat, and is it all and crypto, or like what did you mean by
Blockchain?
Yeah.
We're raising it in fiat.
Okay, yeah, I was
We want to standardize. We want to be able to standardize contracts. We want to be able to make it as going back to it being as when you look at, say, I'll use this for example. If you go on eToro right now, you want to you want to buy Bitcoin, a single Bitcoin, depending on how it fluctuates, anywhere between 60,000 to as high as 110. Or if you go on eToro right now, if you have $10, you'll be able to buy whatever percentage of Bitcoin that $10 goes for. It's the same with stocks. We have tokenized it. Beyond stocks, how do you then tokenize private equity investments? How do you tokenize VC investments? This is what creates more market visibility. This is what creates the opportunity for more people to trust these transactions. This creates more, there's a lack of information that plagues the industry, which public markets have solved. So once you solve that information gap, you get more people interested. More people will want to know. I mean, I'm putting in $100, for example. What am I getting out of it? Is it going to be something that 2 years down the line, we hear that something has happened? And even in terms of what control mechanisms you have, you've seen that in a long time, VCs have traditional VC firms have been a bit separated from taking a hands-off approach. These are all some of the things that we are looking at solving at beyond just say the blockchain aspect in terms of standardizing contracts.
So I come from banking world and investment how do you regulate it?
So, how we're regulated right now? We're in Nigeria. We're currently registered in Nigeria. We're currently undergoing registration in Jersey because we want to be a Jersey listed fund. Jersey-based fund rather. And so at the end of the day, there's going to be dual incorporation in terms of us being incorporated in Nigeria and also on Jersey Channel Islands. In terms of the blockchain aspect and how we implement this, we're currently working with a team of lawyers because that's the most important thing is ensuring we get regulatory buy-in. We need to, well, first and foremost, we need to understand what we are doing. So we're setting up the groundwork at the end of the day, first and foremost, and then we're going to be able to take it to regulators like you. This is how this will operate. This is how, what we're going to do to protect, number one, data, protect ensure that there's fairness in everything we do. Yeah.
One last thing just to add to that from levels after. So stop doing finance. If you're based in Nigeria, you need to be regulated, obviously, buying that. Yeah.
Yes. No problem. Thank you.
If you don't mind, I'll go to Tony first. I'll make sure to use my phone this time. So,
Yeah, I think
sure. Just
yeah, okay, I think great presentation. So couple of quick questions for you. So first of all, what sector are you covering? So you probably mentioned that, I missed it, so apologies. So what sector you are targeting? So how are you going to select those companies that you want to support and help? And how are you going to make sure they deliver? Those are the questions I have.
We are first and foremost sector agnostic. We're going in with an open mind. And over a period of operations, we then know where to really focus on. And this is because we want to be flexible enough to go into sectors, understand them, and then perhaps pull out if we do not like them. In terms of how we go in, we ensure we take a small chunk of transaction size. So what we mostly do is structured transactions. That's where our strength lies as former investment bankers. We structure these transactions. We ensure that the transactions are able to deliver. And then in terms of putting our guarantee on it, well, as much as a guarantee we can put on it as possible, we go in and we take a small piece of the transaction, essentially to ensure that our partners know that they're still have skin in the game. Some of the things we've done a couple of VC transactions. More recently, we were in Kunda Kids. I'm not sure if anyone here knows Kunda Kids. We were in Kunda Kids. We currently are structuring a data center. We're trying to bring the data center to somewhere in Nigeria. It's a $70 million project, for example. It's a tier 4 data center. In Africa, there are less than 10 tier 4 data centers. And so this is something that once we're able to get it through the line, we definitely, now that countries such as Nigeria, which in 2018 passed its NDPR, that's its own version of GDPR, but really started implementing the provisions, I think, 2 years ago. More countries are looking at ensuring that data of their people are localized. This gives us the opportunity to tap into that. And then you have things like large data players such as Facebook, such as Amazon, that also are looking at coming in and localizing and taking off data center storage space because of the AI and cloud computing boom, that where they need to take up as much of this space as possible. This project, which I'm talking about, already has a number of off-takers that have signed off, and it's still in the process. This is just something that, for example, we're working on. So we select, we look at sectors where we understand that there's high demand. In most instances, they might be defensive sectors. I want to go a bit color crop. Business go, business no go. People will use your products. At the end of the day, those are things we're looking at in terms of ensuring that when we go in, we're able to ensure that there's offtake. And then gradually, we then become a bit more selective. But at this point in time, we do not want to tie ourselves down to a sector that might be hit off by, say, trade wars currently ongoing. Nobody knows what's happening. The trade policy might come from America, for example, and it nukes that sector for a while. Or if you go in and you say that you're going to do this sector, then you're stuck with that sector.
Hi. I feel like you've almost answered my question around, because I wanted to find out which sector specifically you were looking at. You're saying you're sector agnostic. For somebody that maybe is currently going through a fundraising round now and looking for not necessarily a VC, maybe venture finance or an angel investor, what I'm looking for is, yes, the money is great, but also support in or has expertise in the sector that I'm already in. So does that kind of, is there any direction you're going in? Because I'm either in like edtech space or resourcing space. And I would like to, if I'm speaking to you guys in terms of support, it's not just about money, but it's also about having that sector experience and potentially a back book of contacts or collaborators that can help grow my business?
So, I'd like to point out first and foremost, we are finance professionals. We are not going to be experienced in all sectors we play in. However, building on this, what we like to do is we like to co-invest with sector experts. And when we do this, we're sure that they also have skin in the game. We have skin in the game. They understand they're able to protect our interests as well as us protecting their interests from a financial standpoint. More recently, within one of the sectors we've invested in, we've introduced two companies together, and they have currently set up an SPV for a project that they want to run. Sorry, a special purpose. They set up a new company. They set up a new company. And this company is then going to jointly warehouse their inputs and create this product that they're looking at creating. Both of them are strong in their rights within that sector, but then they're collaborating together to bring about a synergy to create more value.
And just before we close off, just checking, is there any other questions that people might have? Well, thank you so much.